All right, welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. This week on the Tech Corner, we're going to be covering mega cap company Tesla Incorporated. Tesla is known as being a leading company in design, manufacturing, and sales of software-driven electric vehicles and energy storage solutions. It operates primarily under two segments, its automotive segment as well as its energy generation and storage business. The automotive segment includes a range of electric vehicles such as the popular Model 3 and Model Y, as well as the most recently introduced Cybertruck. These vehicles are known for their performance, design, and integrated advanced technologies like full safe driving capabilities. Tesla also offers a variety of automotive services, including vehicle leasing, insurance, supercharging services through its extensive global network of supercharger stations. The energy generation and storage segment offers products like Powerwall and Megapack, which are used for residential, commercial, and utility scale energy storage. Tesla's solar energy offerings include solar roof and retrofit solar systems aimed at residential and commercial markets as well. Now, from a competitive landscape, Tesla faces competition from several established and emerging players in the automotive and technology space. These competitors include well-known companies like General Motors and Ford in the US-based EV markets. BYD company out of China is a major Chinese auto manufacturer that has overtaken Tesla in total global EV volume, highlighting its competitive edge in the EV sector. Now, from a smaller scale standpoint, other competitors in the EV, trucks, vehicles, as well as light-duty SUVs include Rivian and Lucid Group. Now, from a technology standpoint, one of the other larger competitors in the autonomous driving space includes Alphabet's Google with their Waymo division. Now, Tesla's unique value proposition lies in its integrated approach to both automotive and energy solutions. It is one of the largest electric vehicle sellers in the world today. It holds a significant portion of the EV market in the United States, with about 50% of the market share as of 2024. The company continues to innovate in self-driving technology, as well as advancements in artificial intelligence and robotics. Tesla's vertical integration from vehicle design to production of energy storage systems sets it apart in the industry. The other thing to keep in mind is Tesla's direct-to-consumer sales model, as well as its extensive supercharger network, further enhances its position in the EV market space, as well as recurring revenues that are generated from those fill-ups. Some of the most recent news is very exciting for Tesla. The company recently launched its driverless ride-hailing service on the 22nd of June in Austin to a select group of technology journalists and analysts, gaining mostly favorable reviews. However, the stock's muted performance since Sunday points to a more measured reception from Wall Street analysts as well as investors. Now, going back to April 22nd of this year, Tesla reported its fiscal Q1 adjusted EPS as well as sales. From an adjusted earnings standpoint, the company earned 27 cents a share. We missed the estimates by 15 cents, also down significantly compared to the 45 cents for the same quarter last year. Now, in terms of sales, the company missed the estimates by about $2 billion, posting around $19.43 billion in sales, down 9.2% year over year. Some of the attributes in terms of why it missed earnings and sales included a decline in vehicle deliveries, which were mostly in part due to the Model Y update across 4 vehicle factories globally. There was also a reduction in average selling price due to a mix of sales and incentives. Now, when it comes to Tesla, there are many positives to consider. Tesla's Robotaxi initiative, although in early stages, is a significant growth driver with potential to revolutionize urban transportation, offering a new revenue stream. The development of Tesla's energy segment, particularly the Megapack and Powerwall, positions the company strategically to capitalize on the growing demand of energy storage solutions driven by AI data center needs. Tesla's focus is also to reduce its reliance on China for battery production and expansion, and its expansion in domestic manufacturing of batteries are seen as positive steps towards strengthening supply chain resilience and long-term market position. The company also demonstrates strong profitability with notable metrics. For instance, its cash from operations last year is substantial, around $16.8 billion, while operating cash flow growth is impressive at over 53% year over year. This is significantly higher than its sector median, which also showcases efficient cash flow generation. Now, aside from the positives in the news with Tesla, there are also many concerns we have to consider. First off, Tesla's autonomous driving technology, particularly its full self-driving feature, faces significant regulatory and technical hurdles, with recent tests showing the system is not yet ready for mass deployment. The company's reliance also on government credits and subsidies, which are under threat from reduction or removal, poses a risk to Tesla's financial performance, particularly in the U.S. markets. Ambitious projects such as Robotaxi and humanoid robots are capital intensive and face skepticism regarding the near-term profitability and feasibility, potentially straining the company's financial resources. Now, from a valuation standpoint, Tesla appears to be stretched. Its forward PE ratio stands at around 173 times earnings, which is much higher than the sector average, around 15 times, but also much higher than its own 5-year historical average, around 114 times. This indicates the stock is expensive compared to its peers, but also compared to its own historical 5-year average. Tesla's revenue growth is also estimated to increase by only 6.74% in this fiscal year. This is significantly below its 5-year average of nearly 32%. This is conditioned upon lower year-over-year total vehicle sales and lower product pricing based on rising competition from other foreign competitors as well as domestic manufacturers. Now, from a technical analysis standpoint, the picture on the charts is rather mixed. The stock's 52-week price momentum is robust, with a 1-year price performance of approximately 76%. Over the past 5 years as well, the stock has advanced over 400%. Despite the most recent pullback after the Robotaxi launch, the daily momentum is rising, as illustrated by a positive and rising MACD as well as RSI above 50. Now, Tesla's chart formation is showing signs of reversing its recent trend lower since publishing a 52-week high back in December of last year. The price is above both the 50 and 200-day moving averages. However, the 50-day moving average is below the 200-day moving average, which suggests the stock may be in an intermediate-term trading range. Now, if Tesla falls below the important support level of the 50-day moving average, it could trigger additional selling pressure. Tesla could find secondary support, however, at its rising 200-day moving average. Now, in summary, Tesla is a globally recognized brand with the potential to enhance global productivity with advancements in scalable autonomous driving, artificial intelligence, robotics, and battery technologies. Despite coming off a much weaker than expected first quarter of 2025, Tesla continues to manage the current difficult landscape within the global EV industry, aided by a refreshed product lineup. Elon Musk has a very lofty goal of 1 million robotaxis on the road by the end of 2026, and the degree to which Tesla can scale its robotaxi business will ultimately determine the value of its ride-sharing business. The company also reiterated its 2025 timeline for its AI-related projects, which include the Cybercab and Optimus robotics, which may also serve as near-term positive catalysts for the company and its shareholders to come. That's it for this edition of the Tech Corner on Tesla. Next week, we'll be covering Micron Technologies, one of the global providers of DRAM as well as flash memory, as well as high bandwidth memory in the artificial intelligence space. Thanks for joining us once again on the Tech Corner. I'm George Tsilis. Please like and subscribe to the Schwab Network. See you next week.